Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to maximize Forex trading profits in choppy price action. That's the topic of, that I'd like to discuss with you all today. It's such a beautiful day that I want to go on a walk out in the woods because it is supposed to get really nasty later this afternoon. This is mid-June of 2025, and we're supposed to get some severe thunderstorms later today. So I wanted to go out and just roam around and chat with you a little bit about that topic. And as you can see, the Bow Dog would like to go out with me, but he's not. We're just going to have to leave him here. You know why? Because the mailman hasn't been here yet. And when the mail truck comes up, Bo doesn't like it. So, Bo, you stay here. And there we go. So I did a video yesterday. Well, I did the video yesterday, but it was published, the one before this one, titled Trading Forex Price Action Chop. And I got some interesting comments from folks that I had just kind of told about it even before I got a chance to really get any distribution on it. And had some interesting conversations with folks about trading price action chop. And in that video, I kind of described what the chop was and how you could take advantage of it and all that sort of stuff. And I went through a little scenario that I was in an active position at that time, or actually active positions. I was trading in and out and getting clipped a few pips and then making a few pips and going back and forth. And then after describing that in that video, I said that I ended up the day closing out with a 2.62 or 2.63% gain against my risk, which, I mean, at 2% on a day is, that's outstanding profit. And the questions that I got were, well, how did you do that? You described what you were doing, but how did you do that? How do you get 2.6% in a choppy market? And so that's the thrust of my discussion here, is to go into a little bit more of a deep dive on that, because it's important that you see that it's not only possible or not to fear the chop. I think that was the thrust of the last video that I did, trading price action chop, was not to fear the chop. The real solution to trading chop, or even position trading or whatever, was to have good rules that were not dependent on the type of price action at that time. How many times have you heard these guys on videos asking you for money to teach them how to trade, and they say, "Oh, well, I've got this new thing that I'm working on now," or they say, "Geez, I've developed a new process, a new thing, and it's really working out." Really? I mean, what have you been trading for 15 minutes? You have to change? You don't have something that works? I mean, what's the deal going on here? We're walking up a slight incline here. Let me see if I can get a picture of it. That's that's our little treehouse. I'm in the shade because the sun is really hot. So the problem with these guys is, what are you doing? What do you mean you got a different way, or you're switching methodologies? Or so you really didn't know what you were doing before, is really what it comes down to. I started looking at the Forex market in 2007, but I didn't take a trade until 2012 because I was doing Forex for an academic exercise. I spent 40 years in real estate investment, and I was a software engineer for 33 years. I got a degree in physics. That shit interests me, so I was writing computer simulations and reading all about the Forex market. And I didn't trade until 2012. I thought, well, I'll give this a try. So I took a couple of $1,000 and traded in a couple of mini lots, and boom, that just disappeared instantly. I thought, well, that's strange. I must be doing something wrong here. I've studied this stuff for from 2007 to 2012, 4 or 5 years, doing demo trading just to make sure that the simulations that I was doing were consistent with the, going on live and downloading live data and running my simulations against past live data. So well, let's try this. It didn't work. So I loaded up another couple of $1,000 and I lost that. I thought, gee, I must need more education. So I didn't make another live trade until it was 2018, 19, something like that. And I funded a $45,000 account, real money, and started trading. And within just several months, I lost $40,000 of that. And I thought, what the heck is going on here? And I stepped back from it and used my software engineering background to look at what I was doing. I was solving the wrong problem. In 15 minutes, I was solving the wrong problem. I identified the problem I was supposed to solve. I decomposed that problem into 3 sub-problems that were easier to solve individually. And that's what I've called the life cycle of a currency position: entry analysis, position management, and exit methodology. And each one of those problems, I have one rule that solves that problem. And each one of those rules has, as I've said many times before, 2 to 4 conditions that need to be satisfied. The entry rule, obviously, is the most complex. I have 4 conditions. And if any one of those sequential conditions is false, I don't take the trade. I go get a cup of coffee. And all conditions have to be satisfied, and then I go. But what I find interesting, and I haven't changed those rules since 2018. That's what I use to trade. And I've made 6 figures trading those rules on large accounts. I've lost 6 figures too, and I've explained that in all my videos. I'm not going to go into that now because we're talking about this price action chop and why nobody wants to deal with it. They don't know what to do. And my premise is that your rules don't allow you to trade in the chop because they're geared for somebody's system, somebody's Bollinger Band RSI Tuesday system. And I don't believe in systems, and I don't believe in indicators. I don't use indicators. I don't use systems. I don't trade fundamentals. I don't trade the news. I trade price action generated by order flow, understanding the underlying process of order flow in the currency market. And I wrote 3 simple rules. That's it. And I haven't changed them. So when I hear somebody say, oh, well, I'm doing this now, I've switched from day trading to long-term position trading because it's why. You made all your money doing this, or you made all your money position trading and now you want to drop to swing, or you're doing swing and now you want, well, you didn't do the right rules. You wrote rules for trend following, or you wrote rules for this. You have to change them. That doesn't demonstrate to me that you have an educationally sound process that you could teach to somebody else. And obviously, I didn't learn anything because after I lost money from those 2 mini accounts, I went out and studied from 2012 until 2018. I took courses, I read books. I had been reading books before, but I had been reading them on macroeconomics and the currency market and all that other stuff. Now I was reading those books in terms of what I would want to know about as a trader, in the markets, and taking courses for that. Nobody answered those questions. Nobody talked about rules. They all talked about systems. And I could see that all that stuff was flawed. I mean, I've got a physics degree. I'm almost a minor in math. And did software engineering for 33 years. I understand rules and how to make things work. And this stuff doesn't make any sense. And I lost $40,000 trying to adapt that stuff into what I was trying to do. And you can't do that. And that's not what I teach the students that come to me. Oh, here's a rigid set of rules and you follow those and then magically you're going to be successful. No, 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 no. This is how you build these rules to suit whether you're 24 or you're 54 or whether you're broke and scrambling with your last $3,000 to try to make some money, or you know, you can fund a six-figure account right away. It doesn't make any difference. The difference is the presentation that I do with the student in working with them, because I don't just hand somebody a PDF file and say, good luck, you know, thanks for your few $1,000. It's more than that, because I'm working with the person for hours, because the 24-year-old is going to get a different view of that material that a 54-year-old would, and they deserve the respect for me to recognize that as an educator. That's the difference between just spewing out shit out there. Oh, we're going to use the Fibonacci's and we're going to Bollinger Bands and all this other shit that people are talking about. Bank traders don't use that shit. Now, you can't trade like a bank trader, like some of these guys. Oh, I was a bank trader for 20 years. I'm going to teach you how to trade currencies. No, 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 it doesn't work, because they trade currencies for exactly the opposite reason that we as retail traders do. You can't mix the two up. But who says that? You've got people that, oh, this guy's spent 20 years trading. Well, great. First of all, he doesn't know how to trade as a retail trader. And second of all, is he an educator? Does he understand how he's supposed to present this material to you? Or is he just throwing you a PDF file and you're supposed to do all this fundamental research and do what he did for 10 years? That's not possible. We get flies out here going crazy and out of the sun. So let's walk on back down here. So in how to maximize Forex trading profits in choppy price action is, again, foundationed under the principle that you have rules that are flexible, because that choppy price action will go to position. That choppy price action will go to day trade or swing. And so it isn't just enough that you know how to trade chop. It has to be, you have to understand how to trade, not how to trade in the chop, not how to trade in a position trade. And I was watching a video from a guy the other day. I made all my money doing day trading, but I'm up on the daily charts now trading. It's much easier for me. I check the close the day candle and do all my analysis and stuff, fundamental analysis, and I set up the plan for the next day. Well, he can make that work. He's been trading for 8 years, and so he's comfortable with doing that. But if you haven't been trading for 8 years, and you're not consistent, you're not going to be able to do that. They learn that. Now, whether they can teach that or not, as I've said so many times in these videos, I don't know. But mostly not, because I know I am an educator. I know how to do that stuff. So when I watch somebody else, the way they phrase themselves when they're doing these videos, I know whether they're an educator or not. Some folks are good discussion work around what they do. They don't know how to present how to do what they do, but they're good at describing the process. You can't figure that out from the process, and because they're not a good educator, they may be using indicators and patterns and stuff like that in order to have you try to see what they see, but you're not going to be able to do that. I took a course from a guy back in that 2014 or something like that, 15, 16, and that's what he had. It was a recipe, but it was a recipe for a trend following system. He was saying, put a 50 to 100 pip stop on a price that has the potential to go 150 pips. Really? Well, how do you do that? Well, you do it this way. When this indicator says this and this fundamental thing, and don't trade during NFP and blah 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 blah. And I tried that system. In real life, I couldn't make that work, and I'm a pretty smart guy. So your ability to, I'm going back inside. It's hot. It's hot. All right, so I settled my butt down. Well, am I helping you? my question as an educator right now and doing this video is, am I helping you with the title of the video, which was how to maximize Forex trading profits in choppy price action? No, probably not. But what I'm trying to do is build a foundation of information for you to judge whether what I'm going to say next is valid or not. The other day when I was making that trading Forex price action chop, I was describing taking 3 pips here, and then I lost 5 pips, and then I made 4, and then I made 5, and then I dropped 3, and I was doing all this finagling around. And I was in a current position at the time, and I said, I got to get back to it. I got to finish this video, and I got to get back to the trading because I just let it run. I got frustrated with it. I wouldn't do that normally, but that's where I was at. But I put a little text message up on the screen that said, oh, at the end of the day, I closed out 2.62% against my risk in profit. 2.6% that day. The day before I'd made 0.5%. The day before that I made 0.8%. The day before that I lost 1%. The day before that I made 2%, I think. So we're just picking along, and every now and then we get a good pop. In the essence of how you trade in choppy price action, again, and I don't mean to be a smartass, is that you have to have the correct rules in order to do that. Well, Peter, what are the rules? Well, the rules, again, can be, well, it's like you're learning how to drive, okay? And the instructor says, now, when you're driving this car, you drive so that you are exactly in the middle of the lane between the white line and the curb or whatever. You just drive right in the middle of that lane. You don't vary from that. Well, once you learn how to drive, it doesn't matter. I mean, you're not going to go over into the other lane, right? But you can wander back and forth. All they were trying to do is teach you a specific format. But then they have to also say, oh, look, now you have confidence. Watch for the potholes in the road, because otherwise you'll blow a strut, and that may cost you $300. Learning currency trading is the same thing. I can present the format of the rules that I use, but then I have to work individually with the person to show them how to take themselves into that format so that it's their format, because it's going to be their rules. And what somebody's goals are and their risk tolerance at 24 years of age is certainly not going to be the same as somebody who's at 50 or 60 years of age, right? At 24, you can afford to push it to the limit and to maximize stuff. Jesus, I was doing that in my 60s. I lost 6 figures, big 6 figures, and in my 70s. Because I'm not afraid to push it to the center of the table, because I have confidence in myself to be able to trade and come back. And besides, I was trading, pushing it a little too forcefully to try to take a 6-figure account and try to make $1 million in 3 years. And I just pushed too hard, and I didn't let up the gas. And so I got slapped. Well, that's fine. So I'm trading a smaller account now because I think it makes more sense for my students and those of you that are trading out there that are looking to me for advice on how to manage things. It's a lot easier for me to be trading an account size that's reasonable for you to be trading to replace your job income, or at least significantly impact that job income. And I'm talking about doing it on 10-to-1 leverage, not 100 or 500-to-1 leverage. If you're looking to trade at 100 or 500-to-1 leverage, you're looking to roll the dice. And I'm guaranteeing you that will end badly for you. And so I tend not to work with the younger people that are inexperienced and beginners, because they have all this foolish ideas in their heads propagated by these jerks that are running around driving their Lambos with their ball cap on backwards, and they made $1 million, and they're driving a $300,000 car, and they can't teach shit, but because they have what they have and they're doing what you want to see, that's the person that they're going to go to learn how to trade. That's not to say they don't know how to trade. The question is, can they teach you? Maybe they can. But what is it that they're teaching you? Are they teaching you how to get slaughtered and gain the experience because they're trying to teach you Bollinger Bands and Fibonacci's and all this other kind of crap? Or do they really know how to teach? There's a few of them out there that do know how to teach. I happen to be a professional educator. I've taught martial arts, important stuff, self-defense and karate, for over 50 years. I have students that are still with me after 40 years, some for 50 years that have been with me. Friends and still working together and still paying attention to what I say, that don't need my advice from a karate standpoint, but they're still there. I'm an educator. And so that's my one-up on everybody else. And so what I'm trying to lay out for you in this video is that there's a process. It isn't just a magic pill. Oh, if you do this at this time, this is what your result is going to be. No. That's a system. You have to understand you can't be successful trading, and particularly in trading Forex, on a system, because the whole premise of the Forex market is anti-system. If you've traded for any more than 20 minutes, you've experienced that because you've lost. All the people that send me emails, and that's the way that I communicate with people, you send me an email, I'd be happy to talk with you. I have one on my desk right now. I've watched your channel for a couple of years. I appreciate the knowledge and the information that you have. I can't afford to buy a course from you, but is there anything you can do to help me? Of course there's something I can do to help you. You've got some experience trading, so I can ask you questions and you can say, oh, I keep well, what is it that you're seeing you keep happening? I'll help you with that for no charge, because that may just be the thing that you needed to get you off and to be profitable. That's a success for me. And I do that all the time. I do a lot of emailing with people. But the people who are anxious, and they give me these simple things that they need, and I answer that for them and spend a lot of time. I'll spend sometimes an hour crafting an email response to somebody. And then when I don't give them the answer to how to trade, as opposed to, oh, I'm making a mistake here, how do I fix that? I can answer that. Then they come back and they ask a question totally unrelated to that. Well, I try to help them with that. Then they come back with another question, and I say, well, wait a minute. You're asking me how to trade, but you don't understand the educational process. And then they get aggravated at me because I won't give them the secret sauce. There's no fucking secret sauce. But they get aggravated with me, and then I don't hear from them again. But I've helped them. And they probably don't even realize it. Because you can't just take a process and pull a piece of that process out and say, I've got the magic pill. If you go back and watch, I've got over 500 videos. It's all about process. So that's how you maximize your Forex trading profits in a choppy price action. You just follow the same rules that you always use. But if you're not profitable in your trading, or you're not consistent in your trading, then you don't have good rules. So the advice that I have to give you is learn how to create good rules. I can help you do that because as a software engineer for 33 years, that's the problem that I had to solve for complex stuff. This isn't complex, it's easy. And nobody wants to believe that. And the reason you don't believe that is because people are telling you got to do fundamental analysis and don't trade the NFP and don't trade when the price action is choppy and go out on the daily candle because it's so much safer. Oh, and by the way, we won't tell you have to take an ATR and a half or 2 ATR, maybe 160 pip stop on your entry in order for that to make sense for you. But you don't know how to trade, so you're going to fuck it up anyway. So you're going to lose 160 pips. And because they can't teach you what to do. It's appalling. And it gives Forex a bad name because you have all these people providing false, misleading, and sometimes deceptive, not much, but sometimes deceptive information that people lose a lot of money. If you're 55 years old and you're listening to this video, you don't have any money to lose. You can't risk that money. You will lose, but you've got to know and understand that you have a structure of process, that if you follow that process that you and I have built together, that you have faith in, that ultimately it will work out for you without you suffering catastrophic planet-killing loss. That's what gets everybody, is they don't want to believe in process. They want to believe in a system, and they suffer a planet-killing loss, and they lose the opportunity to participate in the Forex market because now they're too scared to do that. And the people that are 50 years old, they can't even get into Forex trading because they can't afford to take that loss. I'm in my 70s and I trade every day. And I'm not going to suffer another planet-killing loss because I'm not pushing to make $1 million. I've made $1 million several times in my life. So I don't need to prove anything. And I certainly don't need the money to live. And so why am I pushing with the risk of losing all that money? Well, I can afford to lose it, but that would just be stupid to say, oh, I'm pushing too hard, but I'm having a good time, so I'm going to fucking lose all this money. No, that's not a really good idea. And so I simply have reduced the size of my trading so I can make that, talk about that in a more relaxed fashion instead of saying, oh, I made $2,000 a day. What'd you do, make 20 bucks? It doesn't make any sense. But if I say, look, I made a couple of $100 today, you could do that. You might not make a couple of hundred, you might make 20, but on the size of your bank, maybe 20 is proportionally the same as my couple of hundred. And you could see that. But when you're trading in choppy price action, if you don't know what you're doing and you don't have good rules, you know you're going to get clipped. In my last video, I rattled off about 4 or 5 trades that I had taken, trying to get to that last, series of trades that I had to go back in later in the afternoon and manage that trade. I took probably 3 or 4 more trades. I was up probably, when I left that video, I was probably up about 0.5%, maybe 0.8%. And I walked back in and I made 1.5% more, something like that, to end up at the end of the day gaining 2.62% gain against the amount of money that I had at risk to make the trades. Now, it doesn't make any difference whether I was using a $10,000 account, trading 1 full, or trading a $100,000 account at 10 to 1, trading 10 fulls. Doesn't make any difference. Because if I tell you I made $2,000, you're going to want to make $2,000. And you're going to be unhappy if, even though the percentage of what you make is the same, you were as successful as me because I taught you how to do that, but you didn't make $2,000. Well, how about if you just try to make the $20 or $30 or $40 that you're capable of making for the size of bank that you have? And trading in choppy price action is not the way to learn how to do it. Day trading is, because you get to make so many different decisions and things. But when the price action becomes choppy, if you're not convinced that the rules that you have are good, you better stand to the side, push back from the table, and watch that price action and theorize what you would have done in trading that, or go into demo maybe. I don't advise anybody to go into demo and have any kind of results that you could say, oh, I can do that. After I lost those 2 mini accounts, and I went back into educating, I traded demo for another 4 years. I was a hero. I was making 15% a month, 6-8 months online in a row, 15% a month. And then I load up my $45,000 bank, and I lost 40,000 of that in 4 months. Well, what happened to the 15% a month on the demo account that I was doing? Why couldn't I just do 7% a month or 6% a month? I lost $40,000 in 4 months. And that's when I stepped back from it and created the rules that I'm trying to stress to you about. That I then took the remaining $5,000 in my account, and I just about doubled that in the next 4 months. I think it was 4.5 months. I was $200 short of doubling that $5,000. I said, I got this. I threw another 10 grand in and traded that for a while. That was going good. I threw another 50,000 bucks in, and away we went, and we going from there. That was 18, 20, 21 or whatever. I went from trading 1 to 3 lot positions to trading 20 lot, 25 and 30 lot size positions in about 7 months. That was my problem. I went a little bit too fast on that. And again, I was trying to make that $1 million, and I was pushing too much. So I got caught doing the wrong thing at the wrong time and hung on to it, and I was gone. But that is totally attributed to my 40 years of experience in real estate, because my risk management from real estate is embedded in me. It's very difficult to change that to what needs to happen in currency trading. And it does need to change, because I lost over 6 figures because I had that creep into me. And it spoiled my point of view of the losing position that I had. And I just sat there frozen. Away it went. Margin call. So trading choppy price action is not something for the faint of heart, somebody that's not prepared, somebody that doesn't have any experience or much experience, and particularly if you don't have rules that are transferable across all guidelines of the trading spectrum. Because the way that you trade price action is simply to trade smaller and trade more often. That's it. That's how you do it. You go almost to a scalp mode. Now, the other day, I must have made, probably about 6 trades or something like that, 7 trades. That's pushing scalp. If I'd have done that in a 2-hour period, I would have been scalping at that point. But I spread it over 2 working sessions, about an hour and a half in the morning, and then I went back for another 3 hours or something, just sitting there watching price action and going in and out selectively. And so I had about 5 hours in, which is more time than if you've got to get to work. You only have 2 hours to trade, and then you go off to work. You wouldn't be able to do that. You wouldn't have the time at the desk to do that. So when I teach through my course, I'm trying to get you to be able to do your trading and get done with it in 2 hours. So risk management is at the forefront, because you don't want to get into a losing trade and think, I'm going to hold that while I go off to work and it'll all work out in the end, because it isn't going to happen. So by giving you good risk management guidelines to get started, that gives you the confidence in your process so that you can become consistent in your trading and hit certain benchmark stuff when you go from trading a $1,000 account at 1 mini to trading finally a $10,000 account at 10 to 1, trading 1 full lot. And then once you're able to replicate that, then I say, okay, now if you want to do some advanced work, we can investigate how you would map those rules into working in a choppy price action. Because more often than not, you're going to be trading 90% or 70% of your trades are going to be in a range bound time frame or during periods of chop. Chop can last a couple of days, and usually then it goes into range bound with the chop forming some layer of that range. I don't know if you've been trading long enough to recognize that, or you're down on those shorter term time frames to be able to recognize that, but that's the way that it all goes together. Anyway, this video is entirely too long, but I hope that you got the thrust. I didn't clickbait you by saying how to manage Forex trading profits in choppy price action. I have answered that question in an educationally sound manner, but I didn't tell you how or when to do it, because I can't do that in a video because I don't know you. If you send me an email, I would be happy to go into more detail with it, because you took the time to do that. You're just not looking for the magic pill. Peter Rose, Longwood Currency Trading. Have a great day. and have a great trading day.